Welcome to Denver Startup Week. I'm Tammy Dorr, President and CEO of the Downtown Denver Partnership and co-chair of Denver Startup Week. This year marks the 10-year anniversary of Denver Startup Week. DSW has been the catalyst for lots of change over the past decade. And this week, we're coming together to celebrate the past and dream big for the future. We are able to bring Denver Startup Week to this community thanks to our 2021 sponsors. Thank you to our HQ and title sponsor, Amazon, and our title sponsors whose leadership makes this week come to life. Capital One Cafe, Downtown Denver Partnership, Fluid Truck, Hotel Engine, and WeWork. And our track sponsors who have made all of the great content you're hearing today possible, our founder track sponsor, Kickstart, growth track sponsor, Friday Health Plans, developer track sponsor, Quizlet, product track sponsor, Palantir, our designer track sponsor, Battery 621, and the Public Works, people track sponsor, Exactly, and spotlight event sponsor, Strat Labs. Our headline event sponsors are bringing the excitement to the week. Thank you to B-Side Fund, Colorado Public Radio, Comcast, Coors Brewing, Denver Pavilions, Entrepreneurship at the University of Denver, JP Morgan Chase, Method, Moss Adams, Pi Insurance, Promontory Mortgage, PATH, Southwest, Tattered Cover, and VF Venture Foundry. Finally, thank you to our partner and member sponsors, all listed on the screen. Please say thank you to these companies as you enjoy our hybrid Denver Startup Week. And don't forget, use the hashtag #DenStartupWeek to share your experiences and moments of inspiration on social media. Have a great week.
I'm Jimmy Eberhard. I'm the founder and CEO of Fluid Truck. Fluid Truck is growing rapidly. We're currently the fastest growing company in Colorado. We're going out there and transforming huge problems in fleets and deliveries and really providing a platform that gives anybody access to the right vehicle when they need it. Fluid's culture is a really unique one. It's a place where you get the opportunity to challenge, and I kind of look at it as like it's a choose your own adventure book. You step in, we're going to push the challenges, stuff that we're not even sure is possible, but we're going to go out there and try to build it. And it's amazing to watch people that stepped inside of us in the last year and now coming in and building, growing, leading teams. We're a testing ground and a proving ground. It's going to build some of the next technology leaders for the next generation. I love Denver Startup Week. I love people that are out there building, creating, starting companies, taking a chance, saying, hey, I've got this idea, let's give it a go. And so just taking the challenge, going out and trying, that's what Denver Startup Week is all about. Fluid Truck is in a rapid scale mode. We've launched 27 markets this year already, and we're continuing to expand out and build across the US. For anybody that's ambitious, that's going out there and wants to change the world, come join us. We're out there building big stuff, and we need people that want to come lead, challenge, and go out there and transform the industry.
Thank you for joining us this afternoon for a discussion on purpose-driven innovation and investing. Can profit and purpose coexist? My name is Joshua Ross, and on behalf of the University of Denver and Entrepreneurship at DU, welcome. I'm really excited about this event this afternoon. We have an amazing panel of investors, entrepreneurs, and leaders, and a wonderful moderator to guide us through the discussion. Before we welcome the panel, I would like to introduce Vivek Chaudhary, the Dean of the Daniels College of Business.
Good afternoon. As Josh mentioned, I'm Vivek Chaudhary, Dean of the Daniels College of Business at the University of Denver. And it is my distinct pleasure to welcome everyone in the room and online to the panel discussion today. Can profits and purpose coexist? That is the topic that the panel is going to discuss today. So if I could be indulged for a minute, at Daniels, we teach that the answer to that question is an unequivocal yes. Not only can profits and purpose coexist, but they must. The vision statement for the University of Denver is to be a great private university dedicated to the public good. Consistent with this, the vision statement for Daniels is pioneering business for the public good. And this is not just marketing speak. It's embedded in everything we do. It's the reason we exist. That's why every undergraduate student at Daniels takes a course on business for the public good, where they work on a client-based project to solve a social or public good issue. Every MBA student solves a social challenge. Our Entrepreneurship at DU program has purpose-driven entrepreneurship as one of its central pillars. We encourage our students not only to think big, to disrupt, to solve problems, but above all, to make an impact. So that's a very, very brief glimpse into what's going on at Daniels today, and thank you for listening to that. But now to the reason you're all here today and the panel. I am delighted to introduce my colleague, Trisha Olsen, who is going to moderate today's panel. Trisha is the Associate Dean for Undergraduate Programs at Daniels, and she's also a faculty member in the Business Ethics and Legal Studies Department. And what she probably won't tell you in this discussion is that she's also a world-renowned scholar on the whole issue of business and human rights, with some phenomenal work she's done in that area. And I understand that we have a phenomenal panel, which includes at least one DU alum and a parent of a DU student. So I suspect this is going to be a lively discussion. With that, I'm going to pass the mic on to Trisha and let her introduce the panelists. Thank you.
It is a real pleasure to be here today. We are so excited. Thank you first to my colleague, Trisha Olsen, and Dr. Rob, Director of Entrepreneurship at DU. And thank you to the organizers of Denver Startup Week and for inviting DU to host the keynote. We're honored to be here today. Audience in the room, this is exciting, a live audience, and those of you who are live streaming this. So I'm super pleased to be moderating. How did that come through? The lapel or this? This is good. Okay. So sorry about that. My little lapel mic didn't work. There were just a lot of thank yous. I'm not going to repeat them. Thank you, for everybody listening, everybody here, the organizers. This is a super exciting event for us to be a part of. So I am super pleased to be moderating this panel. As Dean Chowdhury already shared, the ethos of this panel is in line with what we teach in the classroom, what we research at Daniels and DU. And so today's panelists really embody this effort, and I'm looking forward to our conversation. So before we dive in, I'd like to give each of the panelists an opportunity to introduce themselves, and we'll just go down the line actually. So if Min-Young, if you don't mind starting, is that okay? There you go.
Thank you very much. My name is Min-Young Son. I'm the founder and director of Blue Room, and we're a startup investment company focused on harnessing the power of business to do good. Our mission is to change the world through best-in-class investing. Our company has two arms, Blue Room Investing and Blue Room Impact. And at this point, I'd like to highlight Sharon Schneider, who's in the audience. She's the founder of Integrated Capital Strategies, and she's been a key partner to us in our impact efforts. And so in addition to funding philanthropy with 10% of our revenues, we have engaged in direct catalytic angel investments in the area of agriculture, art, and housing. Our business model with Blue Room Impact is to invest in our reputation by doing good work in the community, and reputational strength will enable us to attract human capital, as well as assist us in raising financial capital. And currently we have 3 projects underway. Our first is called Liminal Space. This is a housing project in the historic Santa Fe Arts District. And with our investment in Madelon of New York, we're betting on the future of the Red Tech platform to productize real estate development by automating the entire process and supply chain process in an integrated software platform. And our goal is to pilot the ability to offer high quality living space at the lowest possible rent. And so in addition to measuring our financial return and yield on cost, we're also measuring a social return in terms of hours saved of our residents having to work to support their life. In the area of regenerative agriculture and nutrition, we desire to support the environment and support regenerative agricultural practices, as well as the introduction of wholesome foods into the ecosystem. And here we're partnered with our IDES Hospitality Group of Boulder, Colorado. We're angel investors in dry storage, and later we'll acquire an agricultural processing facility in Longmont to support the regional economy. Sorry, and then finally, in terms of art, we believe that human life is enriched by the arts. And so with that, we've invested in Eduardo Sarabia's art studio project in Guadalajara. And during the pandemic, together we hired a dozen artists and moved them into an abandoned warehouse, which the artist himself remodeled. And what started as a studio painting project has morphed into a vibrant production company. And so combined with these projects, Blue Room has multiple avenues to have a big positive impact in our community. Thank you, DU, for this opportunity.
That works. Okay. Hi, I'm Lindsay Beck. I have been in the impact space for 20 years before it was even in vogue or even called the impact space. I'm a two-time founder. I'm right now the co-founder and co-CEO of a company called NPX. It stands for Nonprofit Exchange. Our vision as a for-profit company is to transform how nonprofits are funded by linking money with results. Right now, individuals and institutions mobilize both donations and investments towards impact, but the nonprofit world was missing out on impact investing. They couldn't access those investments. And so NPX developed a new donation vehicle that allows donors to buy outcomes instead of donating and hoping for impact, and developed an investment vehicle that allows people to invest in a nonprofit and earn a financial return tied to impact. We pioneered both of these vehicles in Colorado with some of your pioneering donors who said we are willing to change our behavior, change our mindsets, and do things differently. Helped us bring that model to life here with the Colorado Donor Impact Fund. And we were able to fund 4 nonprofits who also stepped up and said, we want to be accountable for our outcomes. And we were able to bring in millions of dollars of outside investment capital from all around the country to invest in economic mobility work in Colorado. So thrilled to be here on this panel talking about all of this, and thrilled to be part of the Colorado community that really has the desire and action orientation towards doing new things.
Hi, I'm Srikanth Vasan. I'm the founder and managing partner of Avesta Fund. Avesta invests in seed stage and pre-seed stage technology startups that can meaningfully impact what we see as humanity's greatest challenges of climate change and inequality. And we also prioritize diverse founders, women and people of color. In terms of the topic today, maybe I'll riff off of that in terms of profit and purpose. I would say the idea for Avesta is really informed by my partner, Stuart Davidson, and I. We have about 40+ years of combined experience in the world of technology startups, venture capital, as well as philanthropic and impact investing. And we saw that there was a need that was still yet unmet to connect these two worlds of technology startups and impact investors more effectively. And it's especially true in the case of early stage startups. So we decided to start this fund in order to really sort of bring together various strands of our lives together. In many ways, I would say my first part of my career, ranging from McKinsey and Media One, and being a founder, CEO of a couple of venture-backed startups and working at a couple of large VC companies, was, I would characterize as profit without purpose. And then the second stage was largely with Gates Foundation in Seattle, as well as a founding president of a nonprofit college, as purpose without profit, because it was all around the nonprofit world. And Avesta Fund is really our attempt to meld the lessons of the two worlds together, because we truly believe that both these have something of value to add to each other. And we're trying to bring the best of both worlds together, not only in the way we are setting up this fund and hopefully growing it into a meaningful platform over the years, but also the companies that we choose to invest in.
Good afternoon or good evening. I'm Helen Drexler, CEO of Delta Dental of Colorado. You probably know Delta Dental of Colorado as a dental insurance company. You may not know that it's a leading nonprofit dental insurance company in Colorado with a Delta Dental of Colorado Foundation. But our board several years ago set about on a journey to look at how we were making an impact in our community. Historically, we would give 50% of our profit back to the community through grants and program services throughout Colorado to advance oral health equity. We realized that we wanted to not only grow beyond our core business model, but we wanted to have greater impact in community health. So I am now the CEO of Ensemble Innovation Ventures, which is the upstream holding company of Delta Dental of Colorado and the Delta Dental of Colorado Foundation. Our mission is to orchestrate innovation toward healthier communities so that everyone has the opportunity to achieve their best health. And we've just formed our first venture fund where we'll deploy capital to organizations that serve both our strategic, financial, and impact goals for Ensemble.
Hello, everyone. My name is Rain Aubrey. I am the CEO and founder of a company called Pocket Change. We are a social media network similar to Facebook or Twitter or Instagram, but our goal is to be social media that makes things better. We really think that there's an opportunity in the social media space to reimagine how social media affects society and how people interact online, how people have conversation online. So what we're here to do is to try and create a 2.0, if you will, in the social media space. We're a mobile app you can download on your phone. We officially launched on June 17th. We've seen a lot of great reception here in Colorado. People posting anything and everything from meaningful articles, sharing personal stories, posting pictures of them around Denver, going on hikes, whatever it is. One cool thing about our platform is every post, like, and reply sends a free donation to charity at no cost to the user. So the more time you spend on social media, the better the world is getting. So there's a lot of things that we're trying to do differently in the social media space and learn from the giants of Facebook and Twitter and Instagram. You know, how do we deal with hate speech? How do we deal with divisiveness? How do we deal with echo chambers? How do we deal with algorithms? So far, we're seeing great reception. The community is wonderful on the platform. We've seen about 24,000 free donations be made to charity in the last few months. We've seen some incredible conversations happen with people with very different viewpoints being able to have a productive conversation online that doesn't turn into a shouting match. So we're pretty proud of that. And that's what we're here to do. So I hope to be valuable. I hope to be able to share a little bit about how I see the role of entrepreneurs in tackling problems, and especially our society's greatest problems at the moment, and how you can use impact to find investors, find new team members, set direction for your company, things along these lines. So I'm excited for this conversation. It's an incredible panel, as you can probably see, myself included. So excited to get started.
Great. Thanks so much, Rain. It's as though we planned that, because it's a perfect segue to the first question, which is that, in preparing for the panel today, it occurred to me that it exists in part because the traditional capitalistic system has its limitations at best, and maybe at worst is broken. And so I'm curious, kind of along those lines, if you could share your reflections about what drew you into this space. And some of you have alluded to this already, but which part of capitalism are you seeking to mitigate, address, reform, possibly, or even disrupt? So I might just kick it back to you, Rain, since you were sort of on that theme anyway, and then we'll pop over to the other panelists.
Sure, absolutely. My background, I've always been entrepreneurial. I was the kid doing lemonade stands and things like that. In high school, I started a hoverboard company, the two-wheel self-balancing, and ended up doing pretty well in my home state of Hawaii. We ended up outselling Walmart and Target during the Christmas season. And I got really lucky to have an experience a few days before Christmas, which is my favorite holiday, where I was, counting up all of the money that we were making from the hoverboards and feeling like very proud of myself as a 17-year-old. And then realized that if all I used my love of business for was to put zeros into a bank account, it would be a waste of my passion for the art. And I think that that's what brings a lot of entrepreneurs in the social impact spaces is you realize that you're deeply passionate about the form and the power that business has to create change. Sometimes that's negative change, sometimes that's positive change, but it's capitalism in business is an immensely powerful force. And I think our role as all of us here, thinking about these types of challenges is how can we use the power that capitalism and the entity of business to impact things in a positive way? How can we build our companies with incentive structures to lead to positive end results for society rather than negative end results? I think I'm lucky. I see it a lot, especially in the DU communities. I've seen a lot of impact companies starting in the space. And I think that there's a real sort of resurgence of companies and entrepreneurs trying to tackle societal problems. And so my role, I would say, and why I'm passionate, why I'm here, is that I want to try and be a capitalist who is conscious of the effects that we have and build businesses in potentially a slightly new way or with a couple new metrics. So that's why I'm here.
That's great. Thanks, Rain. We couldn't have picked a better week to talk about the positive social media.
Absolutely.
Yeah. So Pocket Change, everyone. It's on your phone. Download it. Shrikant, why don't you kick us off next? Because you talked a little bit about, your pathway. And I'm just curious, you mentioned specifically that you all invest in female-owned companies or historically marginalized communities. And I wonder if you could talk a bit more about that effort.
Sure. I think to pick up on your question about what about capitalism is broken and what are we trying to do with this, I'd say in many ways, what we're trying to do is really harness the power of capitalism toward positive impact. And I think the idea for this germinated from my time at the Bill and Melinda Gates Foundation, where arguably it's the world's largest philanthropy funded by, at that point, the two largest capitalists in the world, Bill Gates and Warren Buffett. And yet, despite the enormous power at their disposal, I could see firsthand just the limits to philanthropy, what it could achieve in terms of the scale of the challenges we face, whether it's climate change or inequalities or health, global health and education. And that's sort of what caused me to say, clearly capitalism has sort of lost its way ever since we signed on whole cloth to Milton Friedman's view of, the only business of business is to make money. And since then, all the other stakeholders and their interests have largely taken a back seat. But I think that's a passing phase in many ways when you see the massive numbers of entrepreneurs out there who are starting companies explicitly to make money, but also explicitly to make a real difference. And similarly, you see large pools of capital amassing among the so-called impact investors. But having said that, the world that I mostly know through the world of tech startups, I realized that at that very early stage, when it is actually most important to figure out how your impact aligns with your business, because we believe culture has a long half-life and culture gets set with the first 5 people that you hire, it turns out that impact ends up becoming an afterthought because they, like I did when I was a CEO, when you have to make the payroll, they go after and figure out where they're going to make their next buck and where they're going to raise the next dollar. And all of that's fine. But in that, I think we're missing a bigger opportunity for really, if you do the work early on, and if you figure out how, when your impact is aligned with your business, you make for a better, more durable business because you can attract a more mission-oriented set of employees who will stay with you longer because they care about the mission, which is bigger than themselves, because you can differentiate with your customers, from your competitors with your customers, because you can attract investors who are aligned with your mission and therefore are also more valuable in more ways than just the pure dollars they bring to the table. There are a variety of sort of tangible impacts that you can have if you actually walk the talk, not just talk the talk, because I'm afraid there is a lot of talking the talk there, whether you call it greenwashing or impact washing or what have you. But we think if it's done right, it has a lot of power, and that's what we're aiming to do. Now, specifically about women and people of color, I think we all know the numbers about how much poorer access to capital they have. And clearly, if you believe that talent is universal, the opportunity is not because of their unequal access to capital. So we think of this as obviously the right thing to do, to lean into people with fewer access to capital. But we also, and this is something we try to do everywhere with our fund, is we try not to do anything that's against someone's interests. So in this case, we say, hey, it's the right thing to do, but don't do it because it's the right thing. Do it because it's going to make you money. Because guess what? There is an alpha here because they're undervalued, this entrepreneurs. So we want to attract people with their greed in some ways, because that ends up attracting more dollars in the long run than by purely appealing to their good sense. So that's the sort of balancing act we're trying to do all the time, is figure out what our North Star is in terms of our purpose and our mission, but then figure out how to align people's incentives in order to get us to the mission.
Great. No, thanks so much. Helen, do you want to weigh in on this one?
I want to say a couple things
Yeah,
on both of these comments. First of all, it's not either or, right? I am actually good at math, but I like to say we have to make 1 + 1 = 3. In the healthcare space, which I truthfully believe we have a lot of work to do in our American healthcare system, because it's driving a lot of profit for a lot of organizations, but at the expense of people who can't afford the healthcare they're receiving. So when you think about the impact within a healthcare space, I would much rather disrupt or solve some of the big problems in healthcare, which makes our community healthier so that they can access the benefits of capitalism, because there certainly are many benefits to capitalism, but it is not being accessed equally by everyone in our society. And social determinants of health is a buzzword that's come up a lot more lately. We've talked a lot about it. The pandemic laid bare the impact of social determinants of health to communities of color. And the reality is social determinants of healthcare is in large part just a nice acronym for poverty. If we can address some of those issues around poverty, you create opportunities for people to rise in the community and have more ability to access the economy, access jobs, access entrepreneurship. So for me, it's not either or, it's and we have to make it equal 3 or more.
Great, I like it. Thanks so much. Lindsay, do you want to weigh in on this question? Just in terms of, I find the model of NPX so interesting, and sort of, I'm just curious about sort of how you came to that idea, and what about capitalism it's fixing?
Sure. So like a lot of founders or those considering entrepreneurship, I came to this having lived the problem. And that's the case with both of the companies I founded. I lived the problem and was so frustrated by it, had to find a better way. And in the case of NPX, I had been the founder and executive director of a nonprofit. So I had lived the fundraising nightmare for which it is. And it sounds really silly, but my husband is in finance, and I wanted what he had. I wanted the Bloomberg terminal of nonprofits. And then I wanted all the data on performance. What is working? What is not? And then how can money follow that? And there are elements of capitalism, specifically around money following what works and survival of the fittest, right? The idea is that rise to the top should be the ones that have the highest impact, and it should be faster, easier, and cheaper to access capital if the idea is working and having more impact. And that simple idea of like robust information flow and money following that information doesn't exist in the nonprofit world. And so really wanted to take some elements of capitalism that weren't apparent in the nonprofit world and bring them over so that we could identify faster what's working, what's not, fund more of what works, stop funding what doesn't, and help more people and the environment faster.
Thanks. And I have a follow-up question, but we'll come to it in the next section. So Mingyun, what are sort of, I mean, you talked a little bit about some of the initiatives that Blue Room is doing, but what's sort of your take on this question?
One of the hardest things about capitalism is that roughly half of Americans actually don't have access to capital if you look at it in terms of emergency savings. And so right away, we have an ism that a lot of people aren't participating. And I think for people who are struggling, it's really tough when they see people who are prosperous and wealthy who have done so well, so effortlessly over the last decade of financial accommodation. Like right now in particular, it's going to be very hard for them. And I think that's what kind of pulls our country apart right now. In terms of our business, in terms of direct formulaic commitment, our asset management business, if you're ever lucky enough to raise $1 billion in capital, at 1%, that's $10 million in revenue. So our commitment would be 10%, 1 million directly to fund not-for-profits in our community. So you would be a great partner, Lindsay, to let us know who could use that capital. But also in terms of our private investments, what we're liking to do is experiment and see if we can pilot and also be an MVP for perfect certain experimental thoughts. So with our housing project, can we actually use the power of modular assembly and prefab and over time productize this process so we can actually relieve a supply problem because it's so hard to bring these products to market. And at the same time, take a Costco-like approach. If we can relieve the rent burden, I think it'll have a direct impact in terms of positivity for a lot of people. And at the same time, it actually may bring people back into the workforce. So that's where we're trying to do the intersection of capitalism and also our investing background.
Yeah, I mean, I think one of the key themes here is just who has access to the system, you know, and so in many ways, you're sort of making it, trying to facilitate greater access to the system. My previous research was on microfinance, and people, you know, this was back in the day when everybody was very excited about microfinance, and they'd say, well, what do you think? You know, is this the silver bullet for poverty alleviation? And I said, no, you know, it works the same way it works for everyone else. It makes the highs a little less high and the lows a little less low. The access to finance, those are important. It's important to have the lows not be catastrophic. And so I think that's a really important theme. So next, I kind of want to get into just what the challenges in impact investing are from the funder or founder perspective. So I would limit you maybe to your top 1 or 2 challenges, and then what's being done about those challenges, if anything. So I feel badly picking on people, but I'll just go with Helen because it looks like you may have something to say.
So our fund is a little unique. When Ensemble Innovation Ventures formed the EIV fund, we deliberately said we wanted 3 levers for that fund. We wanted financial return because no margin, no mission, but we didn't need 20x return. We also wanted strategic alignment for our business so that we could grow our business and keep funding Ensemble, but we also wanted impact. I think our greatest challenge is trying to marry those 3 and balancing them appropriately with the right investments. We've had many people tell us, you got to pick one, you can't do all 3. I actually think there's an opportunity to look at 2 out of 3 or even 1 out of 3, depending on the mix of the companies we invest in. And I think it is about looking at the data. We have some key performance indicators that we've identified around healthcare and access to healthcare, access to health insurance. So we're going to see if we can move the needle on that. And that would be good for both impact as well as our mission. So I think that for us is the greatest challenge, is trying to figure out how to marry impact, profit, and strategy.
Great. No, thanks so much. Shrikant, do you want to chat on the measurement
So
issue?
in terms of problems, there are so many, but to your point, I'll focus on the ones that we chose to take put our shoulder to the wheel on. And I think that comes in play in the world of pre-seed and seed stage tech startups, where what we saw, and just by way of context, I saw that in my previous role, I was a partner on Techstars investment team, where I was leading impact investing across the Techstars network, and saw an opportunity to see about 20,000 companies that applied to join that network each year, out of which 500, give or take, are selected to go into about 50 accelerator programs around the world. And our job as the investment team was to look at the top sort of 20% of those 500 to invest additional capital in. And what I learned was a few interesting things. One was that for all the companies that were emerging, which were truly impact aligned, and I defined that as had a product or service that was aligned with one of the UN SDGs, Sustainable Development Goals. And I was surprised to find that over 1 out of 4 of those 500 companies each year were impact aligned. But less than 2% of our fund managers who are investing in the deal flow, which includes all the who's who of Silicon Valley and New York and Boston VCs, less than 2% were impact-focused fund managers. So I started digging into that and say, why is it that there's so many companies that are starting, but so few of the dollars going to them are impact aligned? And I realized that there were some structural challenges, one of which was for all the impact dollars out there, when it comes to that initial stage of the pre-seed, seed stage, most of them are likely to say, especially if you have the significant dollars, are likely to say, you know what, I can't be bothered with a 100K check written to so many companies. Why don't you guys wait for come back to us when you've grown up and you're ready to raise 10 or 20 million and you're at a series A or B stage? Because then we can sort of justify the diligence needed. And what was the sad thing was these companies were started by entrepreneurs who were crying out for some of the help that was available to them if only those other kinds of impact investors could take the time. And that market disconnect between the 27% of companies started with impact in mind and the 1.5% of impact fund dollars is what we aim to fill the gap of. And we explicitly look at this and say, there's a bunch of things that are already happening in the tech ecosystem in terms of accelerators and mentorships and investor connections, et cetera, et cetera. But what's not happening is the piece we're trying to fill in on, which is very simple. Well, one is really help them through a structured coaching process on what is really the impact you're seeking to create in the world? How is that aligned with your business model? And how do you make 1 + 1 = 3? I use that all the time too. And how do you truly make 1 + 1 = 3 so that you can be more than, not less than, because of your impact? And if you do that right, then the other piece we aim to do is also we're a member of a network of some of the best impact fund managers with over 12 billion in assets under management. And so we can provide warm introductions to the other fund managers who also care about impact and who also benefit from the fact that we work with these companies in their very earliest stages so that their measurement systems are in place, their culture is in place, and it's truly aligned. And if we do those two things right, then we think it's additive to the sector overall, because that's the piece which seems not to be met today. And we do that also by combining some of these so-called seed at scale investing approaches that I learned at Techstars, and I saw that being applied at Y Combinator and 500 startups. So we think that there's an opportunity to take that sort of seed at scale model into the impact world, which is what we're trying to do, while combining with this impact at scale.
Yeah, I mean, I think these are interesting problems, right? There's sort of structural issues, but also, you know, the time horizon and sort of development of where firms are at. Lindsay, one issue, and I don't want to put words in your mouth, but one issue that struck me when you were talking about the model that NPX uses is just the time horizon. So I've been one of those people working on grant applications at a nonprofit in my pre-academic life. And I wonder how you find investors who are willing to wait. And is this in general a space for the impact world where the return isn't quarterly, right? If you're addressing issues like healthcare or poverty alleviation or social media engagement, right? Maybe it could be. But you know, how do you figure out the time horizon for NPX?
Our answer is quite simple. We put the company or the nonprofit in the driver's seat and say, what do you want to accomplish? How long do you need? And how much money do you need? And we get them off that annual grant cycle. And so often we are funding them over 3 to 5 years, measuring impact annually, and making it so that for that project or program, they don't have to fundraise for 5 years. They can instead focus on the issue at hand. And with some nonprofits or interventions, they need 2 years to drive impact and a small amount of money, and others need 5 years and huge amounts of money. And so instead of making companies or nonprofits back into sort of a predefined impact metric or a predefined funding amount or a predefined timeline, it sounds so simple, but it's quite revolutionary. Is like, ask them what they need and build it so that it works for them. And we found that doing that creates exceptional clarity and alignment amongst all parties, the funders, the beneficiaries, and the nonprofit itself, and allows us to avoid some of the trade-offs that I know others see in impact investing. As a company, as a nonprofit, do I have to decide funding versus timeline or staffing versus impact? But instead, if everyone's aligned up front on that funding amount, the impact objectives, and the timeline, then you don't have to make those trade-offs and everyone wins.
Great. No, thanks. It reminds me, Paul Pullman, who's, you know, CEO of GE, this great HBR article at some point said that on his very first day, he announced that they wouldn't be doing quarterly reports. And, you know, the person interviewing him said, well, gosh, that's pretty bold. And he said, well, what are they going to do? Fire me on my first day? You know, so I think sometimes there's room to be bold and sort of challenge, the convention. So Ming-Young, what about your perspective in terms of challenges in this space and what's being done about them?
Yeah, thank you. I think the biggest challenge right now is just having a business platform to start up to fund all the things that we'd like to do. But the previous firm that I helped co-found, and we grew to over $20 billion in assets over 10 years. And one sad thing was that we never really used the full human resources and organizational constructs to then do these missions. And so for right now, what's great about a startup, despite the fact that we're trying to get all these things established, is I can ask our chief creative officer, I can ask the research team to do things that might otherwise seem out of the ordinary. But again, it's the power of channeling those existing people to work together. So I think the biggest challenge starting up is just time and try to scale into a business practice. Because again, and even though like I'd say for us, we try to look at the world outside of just generally accepted accounting principles and thinking about how you create intangible value, but intangible value doesn't pay the bills right away. There still needs to be a translation effect from your reputation to business to revenue. So.
Can I add something on that?
Please.
I do think for structures where you can tap into resources from another existing organization, the human capital aspect of that, never liked that term particularly, but it's harnessing the passion and excitement of your team members in that corporate structure that want to come over and work in new spaces, that want to have creative ideas for solving big problems. At Delta Dental of Colorado, we have a strong culture, and many of our team members love working there because they love giving back to the community because we're a mission organization. Now we have an opportunity to say, what are your ideas for fixing healthcare and access and equity issues within healthcare? And we also can tap them if they're creative or finance oriented. We can leverage their talents to make a better world. So I'm really excited about being able to harness the talent of my team members for the new venture.
Great, thanks so much. And so Rain, as kind of our founder on the team, I feel like we're already a team. Your sort of challenges may be different. So how do you see this space relative to your colleagues on the panel?
Absolutely. I would say one of the big challenges that we've found in the space is exactly like Shrikant was talking about, is there's a big gap between the amount of impact capital available and the amount of companies that want to start, with impact at the forefront. And, as much as we'd love to see, everyone be totally altruistic and do things based on what they believe to be right, I think that there's a big value, a big value to be gained by aligning the incentive of the individual investor and the outcome that they expect to see. So one of the challenges that we've seen is if we focus too much on trying to raise as an impact company, we're sort of shoehorned out of the mainstream in terms of capital access. So that's kind of the bad side of it. The good side of it is that I think that traditional startups that make our lives more convenient are getting tougher and tougher to create. I can lay in my bed right now and get food delivered to me, do my job on Zoom, have someone come walk my dog, get a ride to wherever I need to go. My life is already very convenient, and it's much harder to start a company that just makes my life as a middle-class person, living in America easier. Those companies are getting harder to start. And every investor on the planet is looking for total addressable market. How big is the problem that you're solving? And so entrepreneurs who have shifted their focus and are focusing on solving the major problems, the biggest problems in the world, are the ones that are going to be able to see the incredible unicorn level valuations and capital access and create value for so many people on those teams. So I think that the positive side of it is, if you're starting an impact company, and one of the things that we've kind of figured out is try and figure out how to position yourself in a way that doesn't make you seem so much like, you guys are doing wonderful work, but I would never fund you. More of, look how big of a problem we're addressing, look at how real of a company we are, look at how much value we're going to be able to create, and you're going to be able to get access to capital a lot easier. And the same thing goes for talent. The same thing goes for partnerships. We see a lot of that. But I would say that's one of the hard challenges, is understanding how to align startup businesses, not just with all the great things that they're doing, but the actual business results and the personal incentives that you can align with.
Yeah, no, I mean, that's fascinating. And it's actually a segue. So I had to do a double take because we have talked a lot already and we don't have that much time left, but I did want to get this piece in. So I'll maybe just, ask a couple of you who want to respond to this particular question. And then after that, I do want to ask we'll call it a lightning round for the last question for everybody. But one thing I wanted to talk about is Tariq Fancy, who's BlackRock's former sustainable investing chief, wrote a manifesto of sorts this summer, in which he referred to sustainable investing as, quote, a dangerous placebo that harms the public interest. And he certainly didn't mince words when he said that it was, quote, a dangerous mirage, an oasis in the middle of a desert that is burning valuable time. So this is a pretty harsh criticism from somebody who has seen the ins and outs of the ESG and sustainable investing space. And so one of his arguments actually relates to what Rain was just saying. His concern is that if solving the world's ills, right, solving the social and environmental issues that the world faces is left to the 1%, is left to CEOs or CIOs at large asset management firms, are the issues that are going to be addressed issues that affect everyone, or are they issues that just affect this very small segment of the population? And so his take is that there's kind of a missing accountability in the impact investing space, that everybody gets to tell themselves a good story, but the accountability piece is missing. And he talks a little bit about what the role of government could be there. But I just kind of wanted to get your thoughts on that in terms of, A, his manifesto, but B, this idea that, should private enterprise be shaping sort of the problems that we decide are problems? Any takers? Shrikant, brave Shrikant, thank you.
Okay, well, I'll start it off. In answer to your question, absolutely yes. Private enterprise, to my point, I fundamentally believe capitalism does make the world go around, and we need to find a way to harness its power. Now, I think Tariq is right in that there is a lot of squishiness in our ESG reporting frameworks, in our measurements of carbon offset credits, etc. You could go down the list, and there's a lot of greenwashing where asset managers are out there saying, let's put a new green cover on what we've been selling all along, and it seems like there are takers. So there's clearly lots of issues around how you approach it. I would say, just from afar, because I work on the other end of the spectrum in the early stage, but from afar, the public market certainly seems to be lacking in some reliable measurement systems and rating systems. I know we have the MSCI and all these, but there are lots of holes in them, right? But my take on in our own small way is to go at the earliest end and find scalable ways to address the early stage, because there we think the problem is not one of measurement. There is a measurement aspect to it, but it's one of alignment and sort of unlocking the 1 + 1 = 3. Because I think that's our belief. It's a thesis that needs to be proven. But for what it's worth, I will say that even in the sort of 2,500 companies in the Techstars portfolio, when I did that analysis around impact companies versus the superset, the impact companies outperformed the superset every year over the 12 years that I was looking at that. So I do think that message needs to get out there, and it needs to be proven and demonstrated in multiple ways. So there, I think the stage that we're in is less of a measurement and more of an alignment and sort of turbocharging. But notwithstanding that, there is a measurement problem in the public markets.
I mean, it is interesting, right? And Min Young, you can pop in, but I just think as bigger players get into this space, this is sort of always a concern, right? And it's long been a concern for, there's lots of parallels we could draw, but go ahead, Min Young.
Yeah, first of all, thank you for your comments too. I didn't read this or hear about this manifesto. That sounds like a lot of words to me. And I think it's a devastating.
It's quite long, actually, which is why I called it the manifesto.
I want to be careful how I comment, but if it's what I fear that you're saying, it'd be a devastating abdication of responsibility, particularly because BlackRock is one of the largest institutional holders of most equities given their passive businesses. And one thing as well, in terms of thinking about some of the challenges of capitalism, is that so many votes are held through passively owned vehicles where they are in fact punting key responsibility questions around E, S, and G and whatever else. And so I think that that's exactly why I think people who want to make things better as far as activism or active shareholders this is an opportunity for managers to really say what they stand for with respect to their responsibilities.
And it's still a yes and. Like, I think I like men have not read the manifesto, but I'm going to go read it tonight. Just because we haven't had good reporting on ESG doesn't mean boards shouldn't be thinking about environmental, social, and governance issues. And let's not forget the large amount of millennials moving into becoming shareholders of many of these assets, and the Zennials coming behind them. And they are very clear about what their expectations are of the services they use, of the products they buy. I mean, the accountability around reporting is legit, but it's going to get better. Ignoring it and saying it's not good enough yet, I think is short-sighted.
Well, and I should say, it wouldn't be a panel with an academic if you didn't have a reading assignment after the panel. So I'll be sure to follow up with you all. But so now let's just head to our lightning round, which maybe doesn't need to be too lightning-esque, but about 2 minutes each. But I just wanted to kind of end with what are you excited about in this space? And if there are folks in the audience or folks watching online, do you have any advice, any tips, any sort of, the things I wish I would have known to offer up? Who wants to be our first taker? Shrikant, go ahead.
Okay. Well, I'd say young people is what's most exciting about it. And I would say that in the context of young entrepreneurs who have a strong impact orientation to the kinds of stuff they start, as well as young asset holders. As we know, there's tens of trillions of dollars moving into the hands of millennials, and there's a clear evidence base to how that next generation really cares about aligning impact with profits. And I think this era of the supremacy of the shareholder value over everything else is starting to fade. And I think capitalism is powerful, but it needs to be harnessed in a way that truly achieves more than just a simple sort of shareholder goals. And I certainly see enough evidence that we're making that shift with the next generation. Mm-hmm.
And so any tips for folks getting into this space right away?
Jump in. The water is warm.
I'm happy to hop in next. I totally agree with that. I think that to kind of build off of that, the thing that gets me really excited is I think it's a Techstars principle, the founder problem fit. You want to have the right founder working on the right problem. And I think a lot of the young people, like you said, are really passionate about building impact companies. The other great news is that impact companies are the gold rush right now. I mean, you think about 2 billion people, I think it is, still don't have access to the internet. I mean, you look at education. I have a friend of mine who told me that, if a time traveler came from, 1900 to today, they'd look around and say, oh my God, everything's so different. And then they'd walk into a classroom and say, well, at least something's the same. Maybe not at DU, but at a lot of, public schools and whatnot. So I think that there's huge opportunities for passionate young founders to jump into the space and tackle these massive problems. The tip that I would give is probably to build a really good team. I think if you're in the impact space, you can attract people that are super passionate, and you can get, you can find people that, you would never be able to afford in other lines of work, being able to join your team at rates that are affordable. And so I would say, think about, how do you surround yourself? Maybe you feel, I don't have, every skill that I need to tackle this problem. Fair enough. The problem's huge. Find great people around you. And add them to your repertoire, and that'll be how you solve problems. So that would be my tip.
Funny you mentioned that problem, because at DU, we don't require people to go through full classes necessarily, but you can participate in what Josh calls sprints, where it's a single day. So whatever the problem is, you need to hire a good team, come take a class on team building or hiring or whatever it happens to be. And so we're trying to innovate.
I love it.
Doing our best. So Lindsay, do you want to chat next?
Sure. I think I am most excited about three things, maybe. One is the amount of capital moving to fund impact, to drive impact. Impact investing has grown, I think, 10x over the last few years, if not more, and it has now surpassed philanthropy. So we have more money funding impact ventures than ever before in history. And that is exciting to me. And I think it's the first inning. I think it's just the beginning. I'm also then second most excited about the companies that I see. So in Colorado, we vetted over 100 nonprofits in the economic mobility space, all of whom wanted to be funded based on impact. And then 3, what's linked to that is I'm excited about how much is measurable. So to the point before about some of these impact or ESG reports are light, it's not because it's not measurable. A lot is measurable. And in fact, in all of the work we do, we have impact audits, just the same way you'd have a financial audit. And that used to be the red herring in the room, like, oh, well, you can't measure it. That's too squishy or too soft. And you can. And the Freakonomics people say you can measure everything. So we start there. But so I'm really excited about, and then to be in our position at the convergence of that, bringing that capital to those companies and then being able to measure the impact and let the flow of funds be tied to that impact. I would say my advice to other potential founders or entrepreneurs is just don't be intimidated by the beginner's mind. We talked about this a little bit in our prep. When you hear that manifesto from, a large asset manager, or, you walk into a room and you think, I'm the dumbest one here, that can be a superpower because you have a new lens. You've questioned the status quo. Like, this doesn't make any sense. Why is it done this way? And the answer isn't usually because it makes sense. It's because that's how we've always done it. And when you hit those moments, you're onto something. Like, there is an opportunity there, a problem that you can solve. So don't be intimidated by not knowing everything or being the young new one.
That's phenomenal advice. Yeah, that's great advice. Because I think so much of what all of you are doing is about identifying these gaps or identifying these spaces where it just doesn't quite make sense. So, I mean, that's great advice. Really good. Min Young, how about you?
First, I'm excited to hear there's a lot of impact dollars available, so that's good news. The book, one thing that comes to mind is a book that was mentioned to me a while ago. It was published in 1996 called The Fourth Turning. And a lot of it is about demographic cycles in our country, and it looks at America as a particular great civilization. And so it strikes me that a lot of the young people who are coming up, these emerging leaders and impact investors, now is going to be real make or break time for them. And hopefully we can support them with that. And I guess my advice would be for them to just not back down, just kind of go for it.
That's good. Yeah.
I'm just going to close by saying passion loves company. And there are plenty of big problems to solve. And there is plenty of money. There really is plenty of money. So find out what you're passionate about. Find a problem you want to solve. And then take risk and go find that capital so you can make the world a better place.
So we just have a couple of more minutes. So if somebody's in the audience or listening online and they say, I have that passion, I have the idea, what do they do? I mean, this is startup week, right? So what's the next step?
Find a coach, find a structured program. I mean, you can start Googling where to get all the access to the ideas. You have to start putting it on paper. I would say there's plenty of resources out there. I don't think the resources to help you get started are necessarily the problem, but then to Servat's point, make sure you've got the right coach so you're accessing it in the right way. You have the best chance for success. But I think there's lots of programs out there that want to help you get started.
And what's unique about the Colorado ecosystem of impact investors that makes this a great place to be doing this work?
I'd say a couple of things. One, we happen to be a state where things get done, where there's a can-do attitude, where the public, private, and social sectors have a history of working together, and where I think it happens to be one where it's not so big that you can't move the needle, and it's not so small that no one cares. So I think we're actually in a very good place where we happen to have just the right sort of Goldilocks, just right size and nature of the ecosystem that a lot can happen here.
A lot of folks who have moved here have commented, when you reach out to someone, they respond, which I'm like, Yeah, that's what we do. So that's great to hear. Rain, go ahead.
I just want to kind of piggyback on that. I've heard a lot over the years that Colorado has a very give for startup economy. And I think that's super true. The amount of people that I've just reached out to or met or shot an email and they're like, yeah, let's sit down for coffee and chat. I mean, it is super unusual compared to a lot of other startup ecosystems. And so that won't be it. Trust me, it won't be the case forever. You know, I'm sure the Bay Area a couple of years ago was very similar. And so I would say we've got a beautiful moment in time. You know, we have just the right amount of pudding. So email everybody you can, go to as many startup weeks as you can, and just meet people.
Great. Well, thank you so much. I mean, thanks for the audience for listening so intently. Thank you to each of our panelists. Just a wealth of information here. And as promised, it was a phenomenal conversation. I didn't even get to half of my questions. So we'll have to meet up again, but thank you all so much. Thank you.